I think if you knew me at all, you can appreciate why I wanted to share this video with you today. Today, we're going to actually dissect the CBC Marketplace investigation about how big banks are upselling you. One of the biggest reasons that I wanted to put this here is because I wanted you to get the truth from somebody who's watching this, who's been both worked with the banks in terms of being a banker, but being a branch manager for a lot of that time at the bank, as well as now being outside and really just being a consumer. A bit about my background now, about 5 years ago, I had left the bank. And one of the biggest reasons why I left the bank was really about how this video is going to lay it out for you. So I hope you enjoy and will pay attention now.
The pressure to sell.
We're encouraged to push our targets over clients.
Inside Canada's big banks.
It's not a customer service or advice-driven environment.
We go undercover to hear what's getting pushed.
We have a credit card limit increase for $8,000.
And the promises made.
The average interest you will get at least 10%.
Bad advice. At what cost?
They're not only getting bad advice, they're getting illegal advice.
This is your marketplace.
Minister Freeland, this is CBC Marketplace. We're hoping to speak to you about a story we're doing about sales pressure within the banks.
Hey guys.
Hey, Erica.
We're going undercover.
And of course, we're going to have hidden cameras rolling.
Putting tellers to the test. At Canada's big five banks.
Hi there.
How are you?
Good, thanks.
Seeing what happens when we go in to make a simple deposit.
I'm just here to make a deposit, actually.
We've heard from current and former employees of the big banks who tell us there are targets to hit.
Okay, so although CBC Marketplace is highlighting the big five banks, I do want to put this out there. I do not think this is specific to the five banks. Okay, so I truly believe that there's insurances, there's wherever you get loans, whether it's from a specific loan company. I believe that the credit unions are also going to have target that they push on their staff. So I do want to clarify that in my experience, it's not specific to the five banks, but you can be reassured that this is probably where the biggest push is in the five banks provided.
It's a high-pressure sales environment.
We had high expectations for sales quotas.
We're encouraged to push our targets over clients.
And we've been hearing from you about banks pushing products you don't need or never asked for.
I'd explicitly told them that I didn't want any sort of loan protector service that they offered me.
Kind of noticing that we had kind of high bank fees. It was $9.95 a month through the bank account. And then through his MasterCard, we were seeing different numbers varying from like $30 a month up to like $50 a month.
$95 a month for a useless insurance policy has caused me quite a bit of grief.
All this at a time when financial decisions really matter. And the big five made over $50 billion last year. So are the banks actually looking out for us or more interested in making a sale? To find out, we're going in to BMO, CIBC, RBC, Scotiabank, and TD, visiting 2 branches each in Toronto and Vancouver, with our hidden cameras rolling to see for ourselves if we get pitched products.
I want to see if you have any offers right now.
Oh, sure. What kind of offers?
Let's chat. All clients. So
Watching along will be Sandy Martin, an independent certified financial planner and a former bank employee.
What is the goal of the bank employee?
It's to sell the products on the shelf and to make you feel good about having purchased them.
Just to review the last segment here. So 100% true, 100% true. We had sales targets at the bank, and how you dealt with those targets really depended on the management. I can't say for certain that all the other banks, the ones that I did not work at, which were the other 4, I stayed at the same bank for 20 years, and for most of it being in a management position. And I'll be honest with you, before I joined the bank, it was more or less just a job, a great job. To get a job at the bank was really the highlight until I started to realize near the end of my career, I started to realize just really how unhelpful we were. I can say with 100% that a lot of the pressure we felt came from the management. And I'm sure they had their leadership put the pressure on them. The one thing that I can honestly say that the banks lack, and I'll say this with certainty as well, is they lacked the training. They definitely did not know how to train their staff. They had training programs, some very short, thinking that they were training the new staff or even existing staff. But all they were doing was just showing us how to sell the products more effectively. It was never about the client. It was never about the client. It was about how we can get our products out there and spinning it so it felt like it was about the client a lot of the time. I think there is a deeper problem with this in general, not just banks, but just sales in general. And I think it has a lot to do what sales organizations need to do is really just hunker down on their training and getting the right people in these positions. Let's continue.
So it's just about sales.
Yeah.
At RBC, our tester goes in to deposit $100, but then
you have a credit card limit increase for $8,000. That's cool.
Okay.
And that's not all.
And then you have another one for an upgrade to the Ion Plus visa.
So the harm is that you are treating a moment where somebody assumes they're getting a service as an opportunity to slide in there with a sale. And I think that's kind of gross.
If people have access to credit, how likely are they to use it?
You might not realize how much this is a dangerous thing to have. It can add up really fast.
No pitch when we visit CIBC, but a different story at BMO. After our tester deposits her cash, she's pitched a checking account.
There's no cost for that. So the only condition for the premium plan to have is maintain $6,000 inside the same account.
Not mentioned, if she doesn't maintain $6,000, her account fees double.
There was a lot of sales pressure in every aspect of the bank.
That push to upsell is something this former BMO teller knows all too well.
A lot of people can't keep that balance above $6,000, so they're eventually charged for the premium plan.
The $30?
Yes, I've seen it a lot.
We're concealing his identity and someone else is reading his words because he still works in the financial industry and fears speaking out will cost him his job.
Every week, they would release your results and display your name with what you sold.
Why do you think that email went out?
To shame you. You were scared to lose your job.
We obtain internal documents that show the sales credits BMO employees get for selling things like checking accounts, credit cards, and lines of credit. The more money the bank makes, the more credits the employee earns.
I felt like I had to mislead customers in getting products that they didn't need.
What toll did that take on you?
It was a very unethical thing to do, and I felt like I'm putting them in a worse position.
And what's worse, he says colleagues added products to customers' accounts without their knowledge.
Many times, because they needed to meet their sales targets.
Yes, 100%. One of the biggest things that I remember was knowing who we were accountable to. And number one was we were accountable to the shareholders of the bank. As much as they wanted to make it about the client, what we lived inside the bank definitely was not what we were told to feel about it. I can give you a short story here. I had wanted to do a little bit of digging into one of the financial service managers' sales because she was just killing it. And she didn't come from my branch. So there was a little bit of competition anxiety there as well. But one of the reasons why I wanted to look into it was how is one employee how was she able to just blow her targets out of the water while the rest of us are, wondering how is she doing it? Why is she not sharing her secrets with the rest of us? And I think that's a big thing. It's like when you show competition, it's great. It gives a little bit of a fun dynamic to hit targets. But when it becomes where it's about shaming other people for not hitting their targets, you would think that the banks would want everybody that worked for them to succeed. Am I not correct? Like, you would want that. And the thing is that they never really got around to asking these high performing employees, what are you doing so we can teach the rest of them, right? So that was one thing that really bugs me, was if somebody was doing so well and there was something she knew that nobody else knew, then why is no one else teaching us the same thing, right? But not to mention the fact that when I did a little bit of digging, I found that she was, how can I say, gaming the system that the bank put forth in front of us. You know what? It wasn't even about gaming the system that really took the cake. It was when I felt the courage to bring it up to my manager at the time, my area manager at the time. Basically, she had dismissed it in a sense that she made it sound like she was going to do something about it, but she did nothing. And the thing is that that's what really lost my trust in the bank, was the fact that I couldn't even voice my concern as a branch manager. I could not voice my concern to my boss without feeling like it was going on deaf ears. And so it was only at that point that I realized that the only way I could do anything was to get everyone's attention. And this is probably the first time I'm saying this in public, and only a few people at the bank who I trusted knew I did this. But I wrote an extended letter to all the higher area managers at the bank I worked at about what I discovered and how it was unfair to everyone else. Because this person who was blowing her targets out of the water, let me just say, she was getting the biggest bonus. This is why we worked towards a target, was because we had a variable component of our pay. So we weren't all paid just salary. We all had a variable component to our pay, a bonus component, which meant if we hit our targets, we would get an extra bonus at the end of the year. And that's how they dangled the carrot in front of us, was to show us, hey, if you don't hit your targets, you don't get this bonus. For some people, they didn't care. For some people, it really drove them. Competition drove a lot of people in the banks. For me, it was just about, if we're going to be playing this game, there needs to be a level playing field. And if one person who's running the race, basically because she wants to get the biggest bonus, is not playing the game right, then should we not look into that? And that was the biggest kicker to get me to start looking at my employer at the time. Is something questionable, and what was I doing? Not only is the pressure there to sell, the motivation, the incentive is there as well. But I would say that I can at least speak from the previous bank I used to work with. The controls in place were not controllable. And even at that point when we had discovered, or when the bank had discovered this was going on, after sending multiple letters to many regional vice presidents at the time, it was only at that point they changed the system a little bit so that she couldn't game it anymore. But it took that for someone to take a look at how we were selling and how it became apparent to everyone.
Sound familiar?
Sign up customers or face being fired.
7 years ago, my investigation with CBC's Go Public team revealed the immense pressure employees at all the banks were under to sell.
Already there are calls to better regulate financial titles.
Selling products and services people didn't need just to hit targets. Sometimes even breaking the law, doing things like increasing credit card limits without permission.
It's hard to trust them after seeing incidents like this.
So, has anything changed? At TD, as our tester is depositing her money.
Even since you're client with us, you're able to get a credit card with us. You don't have to go through a credit check. You don't have to locate your income.
So you qualify for a credit card. You don't even need an income check.
The ideal situation is for a credit card to be given to somebody who then keeps a balance on it and can't pay it off. But of course the bank wants to sell people credit cards, and of course the barrier to entry is going to be so low it's in the floor.
Nothing at Scotiabank. But over at another BMO branch,
it's just actually if you're qualified to get a pre-approved personal line of credit.
our tester is told she's eligible for a $25,000 line of credit.
You would recommend that?
Yeah, I mean, it's not all the client will have this kind of offer.
A line of credit with a slightly lower interest rate can really amplify the small amounts of overspending that add up over time, and suddenly you have something that's incredibly difficult to pay off.
Our hidden camera findings, not surprising to this former BMO employee. He recently quit when the pressure to sell became too much.
I said, I feel like this is wrong.
And what did she say, your manager?
She says, every bank does the same thing. If we do it, at least we get the sales.
And it isn't just the frontline tellers.
If you sold, $500,000 mortgage, it would be worth 500,000 points.
This former Scotiabank senior financial advisor says he was pressured to sell too. We're concealing his identity and someone else is reading his words.
It's not a customer service or advice-driven environment. We're there to sell and make money for the bank.
With the stakes higher, is the advice any better?
So Sandy, your head was literally in your hands.
Oh, it's so bad.
We're back inside the banks after this. Get more Marketplace. Sign up for our weekly newsletter at cbc.ca/marketplace. This is your Marketplace. We're investigating the sales culture inside Canada's big banks, visiting branches to hear the sales pitch, hidden cameras rolling.
Even if you're client with us, you're able to get a credit card with us. Oh.
We're also speaking to current and former employees about the pressure to meet high sales targets.
You have to sell something to that customer, even though they don't need it.
Pricey products you don't need at a time when costs are adding up.
Are you feeling the pinch?
Absolutely.
It's an extra, $100 to $200 a week that we're looking at for a family of four. So
At the grocery store?
Yeah, at the grocery stores.
My mortgage rates are constantly going up, and for my husband and I, it's just so hard for us to make those payments.
I've had quite a few clients cry and, tell me about their hardship.
Tough financial times, what this TD employee is hearing more and more. We're concealing her identity and using a different voice.
It feels awful. I shouldn't have to think more about my target than the client's well-being and their interests.
She says she's got a huge target to sell investments, even as some clients say they have bills to pay.
I have had an increase of clients upset, having to take money out of their children's RESPs. If they need to take money out, we have to do what we can to sort of stop it.
So to be clear, do you feel you're under pressure to get customers to make financial decisions that may not be in their best interest?
100%.
And she says there's proof. She secretly recorded a coaching session with her manager about pushing customers. Her words are read by someone else to protect the insider's identity.
When I hear you talking to them, it's almost like you think of them a lot. So that's why you don't want to put force on them. Because you're thinking about them, it kind of backfires for you in meeting your goal.
I don't think it's backfiring. I think I'm actually helping the customer. It's upsetting because this is the corporation I work for, and this is all driven by greed.
Seems like we need to do more digging. So we're heading back inside the banks, this time to test what kind of financial advice we get from folks beyond the tellers.
So before we go into this segment, I do want to make clear, one of the things that really still bugs me is that if somebody had questions about investing money, in order for them to get in front of a certified financial planner, we had to know they had at least $75,000 to invest. And that might be different across the banks. It might even be different across locations because, of course, in different cities, different provinces, $75,000 might not seem a lot of money. But in some provinces, it is. Anyways, that really bugged me because it made me feel like anybody who did not have $75,000 deserved a different type of, how can I say, different type of advice. And here, where you're going to see just basic bankers. They call themselves financial advisors, financial services managers, whatever it is they call them. The word advisor is definitely misled in their title. They don't give advice, or they may give advice that may sound like, but the advice, and you're going to see in this segment, is definitely incorrect, which also bugs me, because it took them to get a license, a specific license, to be able to speak about certain investment products, and they're still not getting it right. Okay. I wish there were more controls in place, and maybe there are. And again, it comes back to management and leadership. I wish there were more controls in place that allowed for leadership to sit down and really listen to the customer conversation, because I don't think there is. I don't think there's enough hours in the day for anybody who works in the bank, for what the expectations are of the bank, for them to do all of that's another big thing about the banks, is their expectations of the people that work there are so phenomenally unreasonable based on how many hours are in a day to be able to achieve all of them. Okay, but one of the things, like I said, in this segment is you're going to find that you're getting some really strange advice from people who call themselves advisors about something so important to somebody who just doesn't know, i.e. investments.
Let's hook up this one to your button cam.
Those trusted financial advisors and planners.
There we go, it's now recording.
Helping us out, our colleague Kimberly. She's going undercover.
If they ask, you have some debt, credit card debt, about $17,000.
Okay. Telling advisors she wants to invest a $50,000 inheritance. Not true, but we're testing the advice we get. First up, what did the advisors tell us to do about that credit card debt?
Hello, I'm just wondering if there's an advisor that I can meet with.
At Scotiabank,
you don't have to pay out all of it, but definitely pay out a portion.
Yep, just pay off a portion of that debt. Invest the rest. Bad advice, says certified financial planner Sandy Martin.
There is no way that you can make 19.99% on your investment. It just won't happen. Of course, you should pay your credit card debt off.
The advisor does not get paid to pay off the debt.
You don't get any sales points?
No, I don't get any points for that.
Over at TD,
you can do a minimum payment.
Minimum payment? At RBC, this advisor also tells us to just pay off some.
For example, $7,000 or $10,000.
Or she suggests taking out a line of credit to pay it off.
I personally do not think line of credit as a borrowing thing.
Encouraging somebody to only pay off a little bit of their debt and then move it around to get a little bit less, like a lower interest rate, that is still bad advice.
As for that inheritance, all the advisors recommend investing in mutual funds that earn them sales credits. They're not allowed to guarantee the returns on those investments, so will they? At CIBC, seems like it's a sure thing.
The average interest you will get at least 10%.
Right.
Absolutely more than 10%. That is why I'm saying keep it there.
He's guaranteeing absolutely more than 10%. Can he do that?
No. Oh, no. He absolutely unequivocally cannot guarantee any number from a mutual fund.
And there's more. Financial advisors tell us they felt they had to sometimes cross the line just to sell those investments. The TD Insider recorded another manager telling her to snoop around a client's accounts. His words are read by someone else.
See if the client has got cash sitting somewhere. Because if you don't profile, that's where the big money is.
Big money that could go toward a product the bank wants to sell. TD tells us the recorded conversations are completely unacceptable and do not meet their code of conduct. As for the former Scotiabank advisor, his breaking point, the death of a client's husband.
I mentioned this to my direct supervisor. The first question he asked me was, are we still getting their investments?
That was the first thing he cared about.
That's when it really hit me that there's no compassion at all. It's all about the numbers.
How do those numbers play out when it comes to investments? Back on Hidden Camera, we're asking about the fees charged on those mutual funds. They're important because a typical fee of 2.5% could eat up almost half the value of your portfolio over 25 years. So, our final check. What will advisors who have to sell mutual funds to hit targets tell us about the fees? At BMO,
Take it out of your returns. Yeah.
the advisor incorrectly says the fees are only charged on any profit that $50,000 inheritance earns, not the nest egg itself.
Just the returns. So if the return was $5,000, it wouldn't be the $55,000 that they take it off.
No.
At TD, we're told not to worry about the fees.
A lot of clients won't even notice because it's very insignificant.
We're also told incorrectly they're only charged on any profit.
Will that 1.9% also be taken from the $50,000? Or
No, it's not taken out from your own principal.
RBC gets it right, says the fees apply to the whole investment, but claims they're no big deal.
As long as you're happy with this return, you don't have to worry about the fees.
I see. Okay.
At Scotia, the advisor claims he doesn't know how the fees work.
I heard they only take it out of the gains. So let's say if your 50,000 grows to 55,000, that 5,000 gain essentially, that's where they take the 2% out of. I'm not too sure how they calculate it.
So Sandy, your head was literally in your hands.
Oh, it's so bad. And I genuinely believe that those frontline advisors don't know the answer. They are guessing.
Licensed mutual fund dealers.
Oh, that bar is so low.
All told, only one advisor gives clear and correct info on mutual fund fees.
Notice, and again, we can't really say how many banks they actually visited, and of all the banks that they visited, I'm sure that they would have made it transparent in this investigation. But nobody asked questions. They just started to give advice, right? Advice when the consumer says, should I be paying off my debts with this first? And some of them said, maybe some of it or not all of it, or actually move this debt to this debt. Like that's just the financial planner in this video said. It's just bad advice. Especially if you compare what it is you're exchanging it for, right? Like pay off the debt you're paying 20% on versus investing into something that might give, this percent. When you start looking at, the trade-off, it makes sense to pay off the debt, does it not? And so it gave all of these bankers the opportunity to make give sound advice, and they still did not, which at the end of the day, they've been conditioned to sell. Whenever somebody sits down in their office, the goal is to sell something, to walk away. So the client walks away with something that will earn the bank money.
As long as you're happy with this return, you don't have to worry about the fees.
I see. Okay.
At Scotia, the advisor claims he doesn't know how the fees work.
I heard they only take it out of the gains. So let's say if your 50,000 grows to 55,000, that 5,000 gain essentially, that's where they take the 2% out of. I'm not too sure how they calculate it.
So Sandy, your head was literally in your hands.
Oh, it's so bad. And I genuinely believe that those frontline advisors don't know the answer. They are guessing.
Licensed mutual fund dealers.
Oh, that bar is so low.
All told, only one advisor gives clear and correct info on mutual fund fees.
Do you think the pressure to sell products was behind some of the advice we got?
Almost all of the advice that you got, I think, was influenced very heavily by the pressure to sell financial products.
Hey, Duff, Erica Johnson with CBC.
Duff Conacher is a consumer advocate who's kept an eye on the banks for decades. His take on what we've seen?
They're not only getting bad advice, they're getting illegal advice.
He's talking about clauses in the Bank Act that require banks to not take advantage of customers and offer appropriate products and services.
So what we documented, you say, is breaking the law?
Yes. Yeah, I think very clearly the advice that was given violates the duty in the Bank Act for the banks to act in the financial interests of their customers.
All 5 banks declined our request for an interview, pointed us to the Canadian Bankers Association. In a statement, it says our findings do not reflect the experience millions of Canadians have every day at the banks. They add that a more formal analysis of the client's needs is expected to be performed when moving from an initial conversation to establishing an investment.
I think one of the biggest things that bankers actually, and you know what, I'm not even going to say just bankers. I think anybody in the financial industry who's ever had to get a license, there are costs involved with managing money. That's why these self-directed companies are positioning fees, because they know that these fees are eating up at the investments. You could do it yourself. Okay. But there are people that don't want to invest themselves. They have no desire to look into companies, investments. They just have no desire, which allows for people like us who are supposed to be giving sound advice on how investments work in the first place. One of the biggest jobs as a licensed advisor, whether it's in mutual funds, segregated funds in the insurance industry, anything financial really that involves fees that somehow the company gets paid on, needs to be transparent. We need to be transparent with what these fees are, and especially if somebody's coming in and talking about them. So it is very clear from the advisors in this video that they have no idea what they're talking about. But again, I would not put it past any other part of the financial industry. It's not specific to the big banks.
So if the big banks aren't looking out for the little guy, who is?
The agency just needs to follow Law Enforcement 101.
Maybe the finance minister can tell us after the break. Got a story you think Marketplace should investigate? Reach out to us at marketplace@cbc.ca. This is your Marketplace. From the misleading
Absolutely more than 10%.
to the downright wrong.
No, it's not taken out from your own principal.
Duff Conacher says the bank's regulator is letting them off the hook.
The agency just needs to follow Law Enforcement 101, which means you're doing regular unannounced inspections. When you catch violations, penalties have to be high enough to take away any profit that the bank made from violating the law.
The Financial Consumer Agency of Canada won't talk on camera. In a statement, it says it's had concerns about bank sales practices and takes the matter very seriously. Adding, banks should only sell products to consumers if it's appropriate and must ensure employees have the skills to fulfill that responsibility. Ultimately, the buck stops with Finance Minister Chrystia Freeland. For weeks, we've requested an interview, but her office says no. We learned she's attending this mining conference in Toronto. So we try again in person.
Minister Freeland, this is CBC Marketplace. We're hoping to speak to you about a story we're doing about sales pressure within the banks.
We keep trying.
Minister Freeland, do you have a moment to speak with CBC Marketplace? We've been documenting sales pressure within the banks. We found bank employees giving inaccurate advice.
But no luck. Later, her office sends a statement saying the government has zero tolerance for banks offering misleading information or inappropriate financial services. And they say they've taken action, added consumer protections to the Bank Act. Those protections were in place during our hidden camera test. So, until consumers are better protected, our expert has this message.
Just do a little bit of research into the evidence of good, sound financial advice, and then you're going to be hearing these pitches with very different ears. That's what I want people to do.
So I don't want to say I hope you enjoyed that, because at the end of the day, it just opens up a whole can of worms. What I do need to say to you, though, is one of the things that financial planner had mentioned was doing your research and not necessarily having to know everything about everything. But typically, if you go into your bank with the expectation that you're going to get all the sound advice you need to be financially secure, financially independent, financially wealthy, financially educated, you are not going to the right place. And really, I think a lot of the responsibility and the onus falls on you to be able to go look and research some of the subjects that you think are going to be applicable to you, which I think there are very basic subjects that I think can apply to every income earning citizen, whether you're in the United States, whether you're in Canada. I think it can apply to everybody. If I could leave one piece of advice here, It is not about the institution. Okay, so I know this video really paints a bad picture on the big banks. Okay, the banks do have great products. Let's just put it that way. They have great products. Let's put it this way. If you wanted to own a house, you need a bank. Unless you save that money, of course, yourself and bought it in cash. So we do need the banks. In this day and age, very rarely any of us carry cash. We have a card. This provides convenience. This is a service that the bank provides. But I suppose at this given moment in time, maybe that's the only service they can provide us, is a place to bank our money, which I think at the end of the day was originally why we had banks in the first place over 200 years ago coming to Canada. But I think a lot of the onus falls on you and knowing exactly your own financial situation to be able to ask the right questions. I would never, ever go to a doctor again if the first time I met with him and told him that I needed to see him. Because most of the time, doctors will sit down with you and they'll say, what brings you in today? And you're going to tell them what brought you in. And the thing is that very rarely will they just ask that one question and issue you a prescription. They will ask more follow-up questions. They will probably take your vitals. They might even send you for blood tests. Okay. I want you to think of your health, your financial health, the same way as you do your physical health. There are some questions that are probably not being asked, whether it's by you or the person in front of you. If you feel like the advisor is not asking you enough questions, chances are they're probably not the right one for you. And that goes for anybody in the financial industry, whether you're in the financial industry selling mutual funds or you're providing insurance, providing debt strategies. You have to be able to feel like the person who's dealing with you is asking you more questions than just telling you what to take. I think that's probably the biggest hint. So really good learning from this video, guys. I'll put the link to the video in my show notes so that you can watch it without the interruptions. But I definitely hope that this was a learning experience for you to really just understand that you might need to take a little bit more initiative to understand what you have before you can even say anyone's taking advantage of you. Okay. You need to take control of your own finances to really understand what you need. And that may entail changing how you feel about independent financial agents, independent financial brokers versus thinking the big banks have all the answers. Okay. Got you. Hope you got value from that. See you on the next video.